of Andro 400, having tons of energy, not feeling tired or feeling at the end of the day that my feet are dragging. I would very strongly recommend it to anybody that feel they need to cut down on their weight or who doesn't have enough energy. Absolutely.
That's fantastic, Joe. And congratulations on losing 46 pounds in 8 weeks with the help of Andro 400.
Pedro, definitely
Guys,
drop the Comrex
check
in the
out
headphones.
Joe's before and after pictures on andro400.com. Since 2004, men have chosen
That's
Andro
better.
400 for one reason: results. Andro 400 can help you safely
You gotta
and
mute-
effectively
you gotta
lose
mute
belly
the-
fat,
the-
gain
the
energy,
switcher.
and boost your testosterone.
House on Talk Radio 1210 WPHT.
You're hot.
Good afternoon and welcome to Investor Schooling Live. Coming to you from Investor Schooling headquarters. I'm Phil Falcone here with my business partner, Larry Steinhaus. We are the founders of Investor Schooling. Get ready to learn real estate investing and stock option investing. Call us anytime during the show with your questions at 855-939-1137. That's 855-939-1137. That's right, we're a live program, so you can call us anytime during the show and we'll take your calls. Don't even worry about what we're talking about because we love to take your calls. Investor Schooling is located in Langhorne, Pennsylvania, serving the Philadelphia area in a real brick and mortar building. We are local guys, accessible to our students a minimum of 2 nights per week. Learn this business, and that's the business of real estate investing and stock option investing from people who live it every day. So today, let me tell you about the topics we're going to discuss on the show. How does Investor Schooling advise students how to structure their real estate portfolios? If you have a real estate portfolio, you might want to listen to that topic. 1,000 people a day are moving to Florida, and that's having all kinds of interesting implications. And we're going to talk a little bit about what's going on in Tampa with what they call an organic population decline. We're going to talk a little bit about creative financing strategies that make any deal an awesome acquisition. We're going to talk about a company out there called Boxable that's doing some really unique stuff, and I'm going to share with you what they're doing. And what can you learn from attending a class at Investor Schooling? We'll give you a little talk about that so you understand what we do. We're going to close out our program in the last 10 minutes talking about the Stock Option Sultan and our Stock Option Picks of the Week. You don't want to miss that section because that is the one section of our show where you're going to learn about things that we're going to be investing in next week. We also had a couple of questions that came in. We'll talk about that while we're on the show. Hey, Larry, what's happening?
Did you hear that Richard Branson is in space right now?
Yeah, I did hear that he was flying to space. I didn't know that he actually left.
Oh, I don't know if I don't know if he's actually like in outer space at the moment, but it's pretty cool that he's in a rocket. It's amazing to me watching these billionaires have their own little space race.
You know what I was thinking? I should buy a put on anything Richard Branson owns, and maybe even on Jeff Bezos, because if either one of them dies, it's got to be a stock drop.
Well, it's funny you say that, but Bezos is no longer the CEO of Amazon. So,
I know, but
right.
he's still the founder, and
I don't think that would affect, but it would SPCE. The Virgin Atlantic would definitely be a problem if Branson doesn't make it.
Well, I imagine that there'd be negative implications to both companies, provided that the founder and the richest investor on the planet to that particular company, it would affect them on some level.
So I'm really wondering when the two of them and Elon Musk are all going to go back to their home planet.
Well, I think Elon Musk is an incredible genius, so I'm not going to pick on him.
Oh, I'm not picking on them. I actually think all three of them were born on another planet and trying to figure out how to get home.
Do you think they're real aliens, like that Will Smith movie?
No, not like that Will Smith movie, because those aliens could not have flown those planes. Did you see what they look like? How could they have flown those planes and then have a human flying the plane again? I mean, it's a great movie, but it's unrealistic.
What was the name of that movie?
Independence Day.
No, that's not the movie I was thinking of.
Well, which movie were you thinking of?
The movie where they dress in black, Men in Black.
Oh, Men in Black. Oh, yeah. That was another great one too. Yeah, I'm sorry, but there's. Well, I guess sorry if Will Smith was
Can't
in
you
two.
read my mind? What's the matter with you?
Sometimes I can, sometimes I can't. I got to put the Sultan hat on in order to read your mind.
I told you before the show, I expect intelligent answers to my complex questions immediately upon the completion of the sentence.
Sometimes you guys really miss the pre-show. The pre-show is hysterical sometimes. We just go at it because we're waiting 15 minutes in order to get anything going here. So sometimes the pre-show is just hysterical.
That's what happens when you lock two guys in a room and don't give them anything to do.
That's true. All we have to do is push buttons. We get to do some of the sound effects like these, right? And that would pretty much be the sound effect if we were not on the air or weren't talking to each other. So what do we got today, Phil? Anything exciting?
Yeah, well, I gave you some topics. Why don't we dive right into them?
Well, let's do it.
Why don't you tell us a little bit about how does investor schooling advise students to structure their real estate portfolios?
How does investor schooling advise students? I had trouble saying it too. And I can read it. How does investor schooling advise students to structure your real estate portfolios? This is the first time I'm ever actually reading this piece of paper that you gave me.
Well, congratulations. You've first now proven that you can read.
So the answer, how am I supposed to answer this now? I'm supposed to answer it fast or something?
You don't have to answer it fast. You can take your time and give us an answer. Tell us how do you advise students to structure their real estate portfolio?
So for most of the students and most of the time, we're telling people to own properties in trusts. Now, we talked a little bit about this last week as well, and the reason we tell people to own them in trust is because there's a lot of anonymity in trust, so people won't know who owns them, which is really important.
That's a good word, anonymity.
Anonymity.
Can you spell it?
No.
Can you say it 3 times real fast?
Anonymity.
All right, that's pretty good.
I am pretty good. Now what? Now that you're interrupting me, I completely lost my train of thought.
I will agree that you're pretty good.
Well, be careful here. We're still business partners.
Right.
I don't know where you're going with this.
So continue with.
All right. And, okay.
I want to know how to structure a real estate portfolio. What are you going to tell me?
So we tell our students, and we advise our students to put our properties in trust. So if I buy a property, let's say 123 Main Street Trust. I'm sorry, 123 Main Street. I then put it into 123 Main Street Trust, and that gives me not only anonymity, and now you got me. Now I can't even say the word because you got me so confused. Anonymity, and it also protects me from crazy lawsuits, for the most part. We had Randy last week, the Mr. Land Trust guy, whatever he was. He talked a little bit about that online as well, and that is a really smart way to do it. Now, a lot of people out there are going, well, what about LLCs? You know, LLCs has been around for a long time. Actually, trust has been around for the longest period of time. LLCs is a great way. However, the problem with LLCs is most people put multiple properties into one LLC. So now all those properties are joined together, and in a lawsuit, someone can sue you and take all of your properties or all of the worth of the properties. In a trust, they're coming after the single individual trust, and all I can get is the one property. Now, of course, I'm going to tell you to check with your attorney and your accountant before you do this stuff and know what you're doing, and come see us, and we'll tell you a little bit more about it. The funny part is we'll find estate planning attorneys won't even know how to do this. They don't even understand it.
Yep, we've all been through that experience already. I think one of the most amazing things about the way we teach how to structure a real estate portfolio is the fact that each and every property goes into an individual trust. Therefore, and this is to me was a mind-blowing thing when I learned about it, therefore that each property I own is in its own separate entity. And if there was some kind of disaster at that property, like the house fell down on someone's head and killed them, right? Or there was a fire and several people died, I would have a major problem on my hands. But if the only thing that that entity owned was that trust, was that particular property, and it owned nothing else ever, then at least you isolated each and every other property that you have separate from that particular property. You should only lose the individual property that had the fire, had the catastrophe.
Yeah, and you know, that's worst case scenario.
Yeah.
But let's talk about little scenarios, like ones that you've experienced in Philadelphia, especially with the trash bill.
Okay, well, Philadelphia has a habit of doing what I call redundant leaning. So, for example, let's just say that one of your tenants that lives in Mayfair, and in that house in Mayfair, the people keep putting the trash out whenever they feel like it. They don't put it out on the appropriate day. So what happens is the trash is sitting out front of the house for sometimes 3 days, 5 days, a whole week sometimes. They just leave it out there until somebody picks it up. And what happens? The trash blows up and down the block. It gets all over everybody's lawn and inside next to their fence and things like that. It's very inconsiderate to your neighbors. So the city of Philadelphia sends out a fine, but they don't fine the tenants. They fine the landlord,
Of course.
who doesn't even know about it.
That's right.
The tenants aren't going to call and say, hey, guess what, Mr. Landlord? Good news. I got a $75 fine against your property. That's not going to happen, right? So what happens is the tenants take the $75 lien against the landlord and they throw it in the trash. In the trash that's still sitting out front that hasn't been picked up. If you sell any one of the properties that you own, the city of Philadelphia puts a lien not just on the property that has the trash out front, but on every property you own until they have something to lien it against. Such as when you go to sell a property, that's when they bang you for that extra money.
Yeah, it's bad.
Right. So one of the ways that you can get around that is by using trust. If you use trust, and each property has its own name, its own business, its own trust, it's very difficult for the city to do any redundant leaning. They still could lien the individual property, but they can't lien every single one of your properties.
So you know one of my favorite things about trusts, it was created for estate planning, and now if anyone's listening and they're planning on getting rich, I mean, if you're not planning on getting rich, if you're planning on being mediocre, that's fine. Then don't do these things. But if you're planning on getting rich or planning to have any substantial estate at all, and when I mean a substantial estate, yes, it's $12 million is the estate tax, but there are inheritance taxes for each individual state that start immediately. So you could save 5 to 15% of your estate by using trust and moving the money into a trust and having the beneficiary of the trust, your children and or whatever you want to do. Your children, your grandmother, your mother, doesn't matter. And you move that money into a trust, and now when if you should die, that money goes there and it's estate tax free because it's already in a trust. But the problem is there's a look back period. And they're going to look back and see if you have your house already in your own name and you move it into a trust. The look back period they'll actually come back to you and say, no, this money needs to be taxed. The other thing, and probably the biggest one, is nursing homes. If you go into a nursing home, you have two choices. You could either have the government pay for it through Medicaid, or you could pay for it yourself. I'm not quite sure, but I'm thinking most people would prefer if they didn't pay for it themselves, because if they pay for it themselves, then all that money that was supposed to go to their heirs, their children, will not go to their children. So
let me ask you
yeah,
something.
Sure.
So can you go into further depth about some of the things that you've done in your real estate portfolio besides trust? Something in depth, more in depth than that you've done, such as the way you structured your will or how you have entities inside the trust. As you know, can you tell us a little bit more about ways that a real estate investor can protect themselves?
So I'm going to tell you something really cool that's in play, actually, while I'm in the middle of doing it. What I've done is I've taken my main LLC. So I've made my main LLC the beneficiary of all my trusts. I'm the trustee, so I have total control of everything. The beneficiaries are now my LLC. Now, what you can do, and what I'm in the middle of doing, is making my children own the LLC. So if they own the LLC and something happens to me, now the trustee is no longer the trustee because I passed away. The beneficiaries of the trust now have to appoint a new. The beneficiary of the trust now have to appoint a new trustee, and they can appoint a trustee. Any one of them can be appointed a trustee, or I can have a contingent trustee of one of them. Basically, what happens is nothing changed hands. The beneficial interest of the trust never changed. The trust never changed. There's no income tax. There's no inheritance tax. There's nothing. And again, I'm going to tell you to check with your estate planning attorney on this, because we're not attorneys. We can't give you the legal advice. We could just tell you that most of the time we find we're smarter than attorneys, but that's another issue. By the way, if you have any questions, 855-939-1137, 855-939-1137, and you could ask us questions about this or anything else you'd like to ask us questions about when it comes to real estate and or stock options or money. All right, what else, Phil?
You want to move on?
Let's move on. And by the way, if you really want to learn this, just come to Investor Schooling and grab either Phil and I. We'll talk to you more about it. So go to investorschooling.com and you can sign up for this Thursday night's class, and it's going to be a good one.
Aren't they all?
They usually are.
Yes.
Yeah.
We talk a lot about trust. We talk a lot about asset protection and the privacy that we like to enjoy and have freedom investing in real estate without worrying about everybody knowing everything that we own. If you're the kind of person that has a couple of properties and you see yourself as becoming a professional real estate investor who's going to continue to buy, you need to get your butt to Investor Schooling, 7 o'clock this Thursday night.
You know, I had a call this week, and somebody said, they called the radio show. So, by the way, if you call the radio show and we're not live, most of the time I'm going to answer the phone. So 855-939-1137, I'm going to answer the phone. So even if we're not live, I'm going to answer the phone. But I had somebody ask me, I said, I invited them to Thursday night. They said, is that one of those sale pitches? And I said, no, we do not do a sales pitch. In fact, if you come on a Thursday night, take your credit card out and hand it to us, I'm going to hand it right back to you. We're not even going to allow you to sign up on a Thursday night. We want you to experience it. We want you to experience a couple other classes and see what it's really like before you even make a decision. If you come this Thursday, or if you're online on Thursday, because we have people in California listening to us now. If you're online on Thursday, you'll also, you'll see an actual class. You'll actually see what other people have paid for and what you will be paying for in the future for. So anyway, I'm sorry. I had to say that because I thought it was important.
It is. So I'm glad you did. So right now, there's a couple of unusual things happening in Florida. First of all, we got about 1,000 people a day moving to Florida. Why? Because of the lack of shutdowns, because of the lack of mask requirements, because of the lack of, the massive amounts of freedom that they have. So
it's the last standing state.
I think
that's still America.
Texas and Florida are both doing it. Texas is also a great state with lots of freedom. Okay, so. But there's some unusual things happening because of this. First of all, so many people are moving to Florida that it's driving the real estate prices up like crazy, okay? And Tampa now reports in at least one county inside of Tampa, there's only 4, that they have what's called an organic population decline, meaning that more people have died in the last year than people have been born.
Wait, more people have died
than people have been born.
More people have died than people have been born in just Florida or just Tampa?
Just in Pinellas County. So Pinellas County has 43% of the home ownership in Pinellas County are people over the age of 65.
Huh.
And more people have died than have been born. So they actually have an organic population decline. That's pretty interesting. If you think about that, right? So how does that play out in Pinellas County? I mean,
How do you get this information, by the way? I know you invest heavily in Florida, but how did you find that information?
because I invest heavily in Florida, I know what goes on in Florida. Now, Sarasota is a much smaller area, an hour south of Tampa. That's really where I invest. But if I follow what happens in Tampa, it often happens in Sarasota.
Really?
Well, the two are just so close.
Really?
Tampa's only 60 minutes north of me.
Okay, so how does that affect your vacation rentals in Sarasota?
I don't know that it affects my vacation rentals, but it definitely gives me something to think about. All right, so in this county in particular, I would think if you know, you have 43% of the people who own the houses are 65 or older.
Right.
And so lots of them are dying, and there are no babies being born in that county because people 65 are done with raising children. So it has some kind of unusual twist to it. And then you throw in the fact that there's 1,000 people a day moving to the area. It creates some unusual circumstances that you usually wouldn't look at in the real estate market.
So what? So all right. So I have a question for you. I have certain ideas in my head, but how do you think that's a opportunity for a real estate investor?
Well, for one thing, if 43% of the houses are owned by people 65 and older, I would think that there's going to be definitely a lot of properties coming available
Yeah.
to be purchased in
That's what I'm
in
saying
short
too.
term.
Sure. Yeah.
Okay, so that's one thing. The lack of births in this particular county. The other three counties tend to be cheaper properties. Pinellas County, if you don't know, is St. Pete, Clearwater, okay? So that's prime real estate. That's expensive real estate. So the older people are buying over there where it's more expensive. They've got the money. They can afford it. The younger people are staying in the other three counties, like Hernandez County is one of them, and I forget the other names. But the other counties have a lot more younger people who are raising children, and they have different demographics because of the much younger people and babies being born. But Pinellas County is the only one that has this organic population decline.
So I'm definitely fascinated by this.
It's kind of interesting.
I'm definitely fascinated
It's
by
like
this.
a whole
Interesting.
nother thing I never thought of, right? And all of a sudden now it's like, what kind of effect does that have? If I wanted to invest in Pinellas County, I got to stop and think about it for
So
a minute.
are you going to mail Pinellas County?
I certainly could.
Yeah, I think that'd be a great idea. I actually, we should probably talk about it after the show. Okay, with show's over, we're gonna go mail Pinellas County because we want to go make some money.
All right. All that being said, all that being said, if you understood, and I'm talking to people out there who are real estate investors, if you understood creative financing strategies the way that we teach them at Investor Schooling, you can make any deal you find an awesome acquisition. Don't you agree?
Oh, absolutely.
If you can apply some of the strategies that we teach people, it doesn't matter what's going on with the population.
Right.
It doesn't matter how many babies are being born or how many people are dying. You're going to have a great deal no matter what.
So I want to talk about that for a second.
Okay.
So let's say, and I'm going to use you as an example, and then we use you as a hypothetical. Let's say your house was worth currently $500,000, right?
Yep.
And I said to you, Phil, I'll give you $1 million for your house. Would you take it?
I'd have to.
Of course, right?
Yeah.
But then if I said I'll give you $1,000 a month for, is it 100 months? Is that no 1,000 months? I'll give you $1,000 a month for 1,000 months. Who cares, right? You're not getting the $1 million right away, and I'm paying you $1 million.
I'd have to wait about 88 years to get the last payment. If you understand the time value of money, you probably would never do that deal.
Right, but the cool part about that is that's an example of how you can actually make money by overpaying for a house. Now, I technically overpaid for that house. I paid double for that house, but because I got creative financing on it. Now, yeah, do I think someone's going to take $1,000 a month for 1,000 months for $1 million? Probably not.
Right.
But that was an extreme example of how it works.
So I'll tell you a story. Back in the day, when I was acquiring properties in Sarasota, I would go to open houses, and I would try to buy their houses. And I went there one time, and this guy said, "Yeah, I'm looking to get like $450,000, but I don't expect to get that much." I said, "Oh, you could get that much." And he says, "Really? How do you know?" And I said, "Because I'm willing to offer you $470,000 right now." And he goes, really? And I certainly had his attention. Everybody else was beating him up on
Sure,
price.
of course.
And all of a sudden, here comes this guy who raises the price. You want to grab somebody's attention? That's a beautiful way to do it. Then after a short period of time, I explained to him that I was going to pay him $1,500 a month for the house. Right? This is the time my wife and I were looking to get a house down there for ourselves, and we were thinking, let's buy it now and let's live in it, right? And he quickly said, let me think about it. I'll call you back this afternoon. And he obviously had a financial background because he called me back and said, no way am I taking this deal. But
Did he give you the number that it would have made sense at, though?
No, he didn't. He just sort of rejected the whole concept at that point when he figured out that it was going to take X amount of years to get paid off. I don't remember what the exact numbers were. But in the end, it was a great exercise because I still say that just because I got rejected on one particular deal doesn't mean it doesn't
Absolutely.
work. I know it works. And when it works, it's awesome. It's one of the it's my favorite way to buy. I love to buy houses with seller financing.
I never told you a story. When I was like 19 years old, I read some book, the Robert Allen book. It was after I bought my first property. I read the Robert Allen book, No Money Down. And I started calling people in the paper. And I come across this guy who had 13 units. He had 13 units he was selling. And I said to him, would you do seller financing? And he said something back like, why you can't get financing? I'm like, and I didn't even know if I could get financing or not because I had no idea. I was 19 years old. They were one of the things like investor schooling at that time. And he said, well, yeah, maybe. I never called him back. You know why?
You were scared?
I was scared.
Well, look, if you were a young investor, it's understandable that could happen to you.
Yeah.
Nowadays, you wouldn't hesitate 1 second to have that conversation.
Oh, I would be meeting him for coffee in 5 minutes.
Yeah, of course. If I had a guy on the phone who said, yeah, I'd like to discuss some creative financing strategies with you, I'd take a rocket ship to his house.
Yeah, right. And at the same time,
fast enough,
right? At the same time, people come to me and they're like, I want to buy your property. They say to me, they want to buy my property. Would you do seller financing? And I'm like, yeah, but you have to understand that I want this and I want this and I want this and I want this to do it. I mean, I just had that happen to me right now. One of my contractors went into my property and goes, hey, do you want to sell it? I go, yeah, this is the number I want. And he goes, would you do seller finance? I go, yeah, but this is the number I want for seller financing.
Okay, you ready to go to the next topic?
Let's go to the next topic.
You mind if I show you something first?
I don't know if you can.
I can.
Yeah.
Check this out.
So, you're showing the Boxable house. Oh, it's too bad you didn't. If you would have told me about that, I could have had Pedro at least show it on the Facebook Live. But that is really cool. So, where is this? So, what's the website if people wanted to see this?
It's Boxable, and it's spelled BOXABL.
So
Boxable.
So tell us about Boxable because this is pretty cool. You've obviously done some research on this.
Yeah. See, I'm thinking of buying a bunch of these and putting them in a mobile home.
Oh, that's brilliant.
Yeah. So this is really cool. This is a house that, when it is closed up, it's only 8.5 feet wide. I'm not sure how high. Maybe like 12 or 13 feet high. A Tesla. Yes, a Tesla, a standard Tesla, could actually tow one of these. Now,
Really?
It's not recommended that you tow a Boxable house with a Tesla. They were only showing you that it could be done.
And Boxable is owned by Elon Musk, right?
I don't believe it's owned by Elon Musk, but
Okay.
Elon is doing some marketing for them. What
Okay.
he did is he bought a Boxable home and he put it on the grounds of the SpaceX factory in, I believe it's in Texas. And you know how he's famous for sleeping at the office?
Yeah.
He's sleeping in a Boxable house
Wow.
on the SpaceX
Cool.
property. I mean, the guy's a billionaire. He could live in anything he wants to, but he's living in this Boxable thing right now.
That's pretty wild.
All right, at least that's what he's saying he's doing. So it's pretty cool. And you can see in this video that I've put up, if you go to Boxable.com, it's BOXABL.com, you can see that this property is built in less than a day. So imagine something gets delivered to your property. The walls are hinged. They fold out. The whole house is built in less than a day, and they're gone.
That's pretty fascinating, I gotta tell you.
It's amazing. It's amazing. It's only 375 square feet, but it's very cute, open layout. I could even show you the layout. this is what the layout of the house looks like right here.
Oh wow, look at that.
Got a kitchen. It's got a kitchen, a bathroom, 1 bedroom, and a living room.
So I noticed that the whole thing folds down. How does the kitchen and the bathroom fold out?
All I can tell you is when it's all folded together, the kitchen cabinets are designed in a manner for which they are totally intact.
Really? That's pretty wild.
Right. All they have to do is pull the walls out and screw them together.
Have you looked up pricing on that yet?
Yeah.
And how much is one of those?
It is a bargain and a half. It's $49,500.
No kidding. Wow.
If you finance it, it's $250 a month.
No kidding.
I'll take 25 of them right now.
That's right, yeah.
Right. If you had, say, a mobile home park and you could put these things on it, at $250 a month, you cannot lose.
What's the hookup cost for to hook it up to sewer and water and electric?
Well, I'm going to assume that's similar to the way the mobile home industry works.
I'm guessing the same
when
thing.
the
sure.
home arrives, you got to dig a ditch. If you have a public sewer, hopefully you have a connection there. If you don't have a connection there, you've got to dig a ditch and you got to PVC pipe it to wherever you need it to be. So that there's going to be some additional setup costs, but we're not talking about $15,000 here. We're talking about a couple $1,000s.
What about heat and air conditioning? Does it have it too, or no, you don't know?
It has to. How can they?
Well, it may not, because remember, they could be built for California.
Okay. Well, all I did at this point was minimum amount of research that I did.
Yeah,
I
it's
put
great.
My name on the.
It's very cool.
I put my name on the reservation list. They're also doing a fund. So they have a fund. If you want to invest in their company,
Wow.
you can. Accredited investors can lend them money, and non-accredited investors can lend them money at a minimum of $10,000.
That's pretty impressive.
Right. So they got a GoFundMe page, and I'm on the list already. I'm letting them know that I'm interested in buying some of these properties. If I can't buy them right now, I'm in the process of acquiring mobile home parks, and in the next year or so, I'm sure I'm going to have a bunch of places that I think these things might be beautiful to fit in.
I think it will go really well with your tiny house park model too. I think it'll actually blow away the tiny house park model.
Well, I mean that thing is what it is, and because of some of the ownership issues there, I'm not going to be messing with that.
No, but I'm talking about the fact that you could either rent these as little houses, or you can have people live in them.
Yeah, like if I bought a mobile home park that had 25 spots and half of the mobile homes were garbage, I'll get rid of the garbage ones and I'll go order 15, 20 of these new things.
That's pretty awesome.
At $250 a month, how could you get hurt?
I like it. Hey, why don't we go to a commercial?
Why don't we?
All right, we'll take us to a commercial, Sean.
Hi, I'm Phil Falcone from
You're good.
Hey Pedro, did you get his text that said to lower the output?
In Langhorne this Thursday night at 7 p.m. I will teach you how to buy ugly houses and make them beautiful.
That's pretty wild, man.
As a bonus, we will also teach you stock option investing. So get your butt to this meeting, 7 p.m. this Thursday night, Langhorne, 215-876-3002, investorschooling.com.
Hey everybody, it's Larry Sinus from investorschooling.com. You heard my partner Phil Falcone tell you why you should be there this Thursday night to learn about real estate investing and learn about stock options trading. We're telling you right now, you will make more money than you've ever made in your entire life if you learn these two skills. Be there this Thursday night at 7 o'clock in our Langhorne headquarters. Go to investorschooling.com. Pull over right now, take out your phone and go to investorschooling.com. RSVP right now, investorschooling.com. See you Thursday.
Hi, I'm Phil Falcone from Executech Suites. We're an executive suite center in Huntington Valley on Buck Road, 67 Buck Road, Huntington Valley. I'm sure you've driven past it. We're right in between Street Road and County Line Road. We have 47 offices in the prestigious address of Huntington Valley. I have offices starting at $595 a month. You're probably wondering, Phil, what do I get for $595 a month? Let me tell you. You get an office big enough for one person. You get the furniture in that office. You get the telephone on the desk. You get the telephone numbers. You get the fax numbers. You get 2 full-time receptionists to answer the phone in the name of your company and patch the calls to you. So if your company's ABC Painting Company, hey, ABC Painting Company, how can I help you? Would you like to talk to Bob? Let me get him on the phone. You could be home sleeping on your couch, and I'll patch the calls right to you. What else do we give you? We give you the conference rooms, we give you the kitchen, we give you the mailboxes, the printer, the copier, the scanner, UPS service, you name it. All of the utilities, cleaning service, and best of all, we give you free coffee. Get yourself to Executech Suites. Phone number is 215-942-7701. 215-942-7701. ExecutechSuites.com.
You're hot.
Investor Schooling Live. Hey, we are here. We're talking about real estate. We just had an awesome conversation about something called Boxables. If you missed that, oh, I'm sorry. You missed a good one. But anyway, you can give us a call at 855-939-1137, 855-939-1137 with any questions about anything that has to do with real estate, stock market, stock options, or just plain money. 855-939-1137. Hey, call in. We'd love to talk to you. All right, what's next, Phil?
Well, before we get off the Boxables, let me just say a couple other things. They're 375 square feet. They're $50,000, modular home. But they've also got Elon Musk is allegedly living in one, like I said.
Right.
Now, if he really is, and he starts pumping up this company,
Oh, yeah.
this thing's going to explode like crazy.
Like Bitcoin.
Right. Now, this is not a publicly traded company.
Not yet.
Not yet.
Right.
Right? At this point. But this company is amazing. You can actually, if you go to their website, you can see the factory that they're building these things in. It is 100% automation. No people. It's all robots.
Really?
It's all robots, man. It's
Do the robots get $15 an hour?
I doubt it. The robots, guess what? The robots don't call out sick either.
They don't call
Right?
that sick
They
either.
never call out sick. It's
No?
amazing, these robots. They're amazing. Right? They just keep working 24/7.
They don't go out for cigarette breaks.
Yeah, it's
They don't go on unemployment. Yeah, I get it. Okay. We're going off on a tangent here again,
all right. So, what can a person learn from attending a class at Investor Schooling?
They can learn magic and how to buy houses with no money, how to make more money than they've ever made. It's really what I think they can do. It's just a great place. We have so much fun. We have students come to us and like, I never knew you could do that. 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 I never knew I could pay less taxes.
You can do that? You can do that?
Can you really do that?
No, we just did it twice last week.
Yeah, exactly.
Yeah.
So these are some awesome things you can. I mean, really, if you ever want to learn about how to buy houses and make them, come on, Phil,
How to buy houses and what?
and make them. How to buy ugly houses and make them. There you
Beautiful.
go. Do it again because I interrupted you.
You have to say, you want to learn how to buy ugly houses and make them beautiful.
I don't know. You just don't sound as good as you did in the commercial. We have to do it again.
Okay, we'll do it again.
All right. So that's one thing you can do, and you could also learn how you. We taught one day. We taught 13 different ways to invest in real estate, and 3 of them didn't even have anything to do with owning real estate, which was a really nice idea. We could teach you how to lend money. We could teach you how to borrow money. We could teach you. By the way, how much money do you usually go to closing with out of your own pocket, Phil?
Usually less than 5,000.
Yeah, I actually, like, a lot of times I go to closings and get money, which is kind of a neat little thing to do, too. So, yes, you can absolutely buy houses with no money. I promise you we do it all the time. If you don't believe me, I'll bring you to my next closing with me, and you can see how I bought the house with absolutely no money out of my own pocket.
So imagine for a second that you were a student at Investor Schooling and you found a property. You think it's a pretty good deal, but you're not completely sure. Your realtor that you're working with says it's a great deal, but you're wondering to yourself, if it's such a great deal, why isn't the realtor buying the house for herself?
Oh, isn't that funny?
Why is she selling it to me? Well, if you were a member of Investor Schooling, you could come here twice a week during the week that you saw this property, and you could discuss with us if it is in fact a good deal. If there was a strategy that maybe you didn't know about and you overlooked it, we could probably take your mediocre deal and turn it into an amazing deal if you just applied some of the techniques that we teach you. Now, That is something that took me a very long time to learn. And now that I know it, it's amazing to me how many other people don't know these strategies. If you want to learn some amazing strategies about how to buy properties with none of your own money, or get other people to finance your properties, or get other people to lend you money to buy properties, this is for real. We do it all the time. Get your butt to Investor Schooling this Thursday night at 7 o'clock, and we're going to teach you some of these things.
You know, we have somebody asking online. It's hard to read. I don't know why the screen is just really small this morning or this afternoon, whatever. But they're saying something about buying properties in Philadelphia. You want to give him some advice on how to buy properties in Philadelphia? He's reading. He's going to try to read the question.
I have a question. I know that real estate is popular in a big city like Philadelphia. What are your opinions about investing, Philadelphia, flipping, wholesaling? Is it a good idea or not?
Okay, let's go. Go for it. So the question is, he wants to know if Philadelphia is a good place to invest. Real simple.
Well, the positive parts of Philadelphia is the fact that there's lots of houses. There's lots of people who need to sell their houses. There's endless opportunities to acquire houses in Philadelphia if that's what you intend to do. The negative side of Philadelphia is that you have the government, and the government in Philadelphia is a very big problem. They force you to get a business privilege license. They force you to get a landlord license for every property that you own. They force you to go through lead-based paint inspections, which can be quite costly. They force you to get a license to be a wholesaler. They send you bills for the rest of your life, even if you don't have any properties in Philadelphia. And the list goes on and on. I'm not going to bash Philly that much. I made my bones in Philadelphia. I lived in Philadelphia for a longer period of time than I haven't lived in Philadelphia. So I'm a Philadelphian. And I love the city, and I hate the city. And would I invest there again? Sure, I would. If the circumstances of real estate prices and opportunities were abundant, I might have to, even though I don't want to. Hope that answers your question.
So I tell you, probably the best thing you can do in Philadelphia is wait. And
I think that's the move right now, no matter what.
Yeah. Well, I don't know about no matter what. There's always a good deal out there. You just have to find it. It's harder to find them now. There's no doubt. Mm-hmm. But there's always a good deal right now. But right now, everybody is jumping all over Philadelphia because the houses are still relatively cheap. And relatively cheap being where, like in Bucks County, you're buying something for, you're buying something that needs complete renovation for $350,000 to $400,000. Where in Philadelphia, you're still buying something that needs a complete renovation for under $100,000, and you could still possibly make money on that. But it's just a pain. I mean, I've been saying this for years. There's two places in the world to invest. One is Philadelphia, and the other is everywhere else. And I choose everywhere else. That's all. That's just me.
Well, so do I. I mean, I sold my last property in Philadelphia. One time I had, I don't even remember how many, 26, something like that, 25, somewhere in that range. I had properties in Philadelphia. I sold them all, and I moved a lot of the money down to Florida because I just got fed up with it. And the difference between Philadelphia and Florida is like black and white difference, okay? It's so ridiculous. They're not even close. In Philadelphia, you have all this government interference. They will not leave you alone. They will never leave you alone. You'll be dead, and they'll be sending you bills,
yep.
Okay? I just think they bill people just randomly, and probably 25% of them are dumb enough to pay it, okay? But in Florida, you will have zero involvement with the government. The only time that the government even came around to talk to me at all in my 9 years of investing in Florida was when I thought about fixing up the house myself. And the state of Florida said, no, you're not going to do that here. They have these certain things called overlay districts, okay? If you had a house nowhere near the Gulf of Mexico, you could probably build it yourself and nobody would bother you. But when you have a house on Siesta Key, very close to the waterline, they have what's called an overlay district. And in the overlay district, a homeowner will not be allowed to work on his own house unless he has a general contractor who oversees everything. And even then, that homeowner is not allowed to participate in the construction.
It's interesting.
You have to be okay, so they have several reasons why. First of all, you can renovate a house on Siesta Key close to the water, but you cannot knock it down and build anything else new without all the permits and everything that you need.
Okay.
Okay. And if it's a new property, it has to be 17 feet high on stilts. You can have a structure on the bottom, but it can only be 350 square feet, enough for like a staircase or an elevator shaft to go up. And then you could build multiple floors above that, but now you're talking, you're probably talking about $1 million house by the time you do all that.
It's pretty cool. Okay. You also had you had one thing in Florida that was interesting too, which was the 50% rule.
Yeah.
When you're renovating a house, and that's by the way, that's not just in Florida. That's many places.
Yeah, I think it's all over anywhere there's a coastline.
No, I think it's anywhere where you're doing a major renovation and the house is old and it's not up to code. Up to current code. Like staircases are thinner because they used to be built thinner or they used to be built on a different slope. And now when you're renovating a house and you're renovating more than 50% of the house or 50% of the value of the house, then you have to bring it up to full code.
Right. So the way that we did it was I had to hire a general contractor. I wasn't allowed to physically work on the property myself, which was fine because I don't live in Florida at the time anyway, so I didn't care. And the general contractor that we hired, I mean, he was expensive, but I was very happy with the work that he did. He did a beautiful job. So first thing we did is this house was a duplex. It was a 1+1 on each floor, okay? And it had a huge garage, a garage that you could have parked like 3 cars in.
Oh, I need that garage.
Right? So what we did was we totally ripped out the garage. We said, we don't need a garage. People who go to a vacation rental don't need a garage.
Sure.
They're driving a rental car. They don't care about the rental car. Just leave it outside. So what we did is we turned it, the first floor was a 1-bedroom, 1-bathroom. We turned it into a 3-bedroom, 2-bathroom on the first floor. And we turned the second floor into a 2-bedroom, 1-bath. Okay? And this place was a beautiful property and made a bunch of money, and I ended up selling it for a nice profit.
That's fine. Yeah, that's great. I remember that story. I remember when you were going through it, and you had to go through that. But that's probably the biggest thing that Florida has done. I don't even say done. It actually made sense. But in Philadelphia,
yeah. Look, there was a lot of ways to get around the problems too. The 50% rule, they appraise the house before you get started. And then if the house appraises for $300,000, they come back to you and say you can't spend any more than $150,000 on this renovation.
Right.
Our number, I think, was $175,000. So what do? We left some of the bathrooms in the current state, right? And we just left them that way, and that's how we saved some of the money. We had some other things that we wanted to do to the house, and we left those things out. But after we did the renovation and closed out the permits, some of those things just got done.
You mean you did a bathroom without getting permits?
I mean that things just got improved.
Yeah, like you change a toilet, but you can change a toilet
You're
without
allowed to
getting
go
permits.
around and do some
You
things.
could change tile without getting a permit.
You don't
totally
need a
get
permit for everything that you do.
That's absolutely true, and you really need to know the rules on that as well. Oh, yeah. I had something interesting that happened to me this week.
Sure, what
with
is
a property that I own. And I know we're running into a little bit of time, but I got to tell
I'd like
you,
to hear that story.
This is an interesting story. So I like investing in condos and townhouses, and the reason I like investing in condos and townhouses is I don't have to worry about the roof, I don't have to worry about the siding, I don't have to worry about all this stuff, right? Plus, I will tell you that in my opinion, people who rent townhouses and condos tend to stay there a long time. Because they're nice properties, and they're typically the person who has a 620 credit score, has just enough money to make to get by, and they pay their rent on time all the time, and they don't move. And I hate it when people move, because when people move, it costs me a fortune to renovate the property, or even to bring it back. Sometimes it's anywhere from $1,000 to $20,000, depending on how old the property is. So this is one that I took over this property subject to. I took over the mortgage about 6 or 7 years ago, and the tenant that I took it over with was still there. And, I knew that when she moved out eventually, I was going to have to renovate the property. And she finally moved out. She moved out about 2 weeks ago. And I go into the property, and I bring my contractor in there, and he says, and I'm going through the kitchen. It's, replace the kitchen, replace the bathroom. Let's make it really, really nice. By the way, I don't even know anything on the property anymore, or almost nothing on the property anymore. And the property's probably worth on the market today, probably $180,000 renovated. So he'll put in $20,000 to renovate it, and I'll rent it, and I'll still get $1,700 a month for it. It's a great property. So we're going to one of the bedrooms, and in the bedroom above that, it's a first floor unit, and above that there's another bedroom, that's from the other unit, the unit above it, and there's a deck above that unit. And anyway, we see that there's a crack in the drywall above the sliding glass door. This room has a sliding glass door. It doesn't have a window. It has a sliding glass door. It also leads out to a deck. It's kind of a neat little apartment. Anyway, so I see a crack in the drywall, and I said, of course, you got to fix that crack. I said to the contractor. So 2 days later, he goes there. He starts doing his rip out. He's ripping out the cabinets. He goes over to the crack. He takes a little piece of drywall out, and he realizes that the entire structure of the condo on that wall is rotted out, and that's why the drywall cracked. Now the header of the sliding glass door is completely rotted out. The frame members leading up to the second floor are completely rotted out, and the sheathing, they replaced the siding about 4 years ago on that building, and the sheathing is all rotted out. Now this is interesting because if it was my house, I'd have to take care of this. Now the condo association, I'm going to have to tell you what happens because I really don't know what the outcome is going to be yet. But the condo association is going there to inspect it on Monday or tomorrow, and I'm going to find out what they're going to do. But technically, that is not my problem. That is the condo association's problem.
So I'll tell you something. First of all, I want to concur with you that most investors will never invest in anything that has a association fee or a condo fee.
Mm-hmm.
I have bought many condos, okay, all around where I live. So I totally like that strategy because I think you get what you pay for with those condo fees anyway. And guess what?
true.
I'm not even paying the condo fee because the tenants are.
That's
right?
true.
The tenants pay rent, and that's how I pay for the condo fee. But I had a property in Hatboro that I bought. It had flooded out, right? And the structure underneath, the floor, the floating concrete pad on the bottom had moved, and they went into the condo, gutted all of the walls, ripped out all the sheetrock, and fixed the floor, busted up the whole floor, and then re-poured the entire structure of the floor, concrete, re-poured it all, and then all I had to do was come in and frame up the walls and sheetrock it.
That's great. Yeah. So now I'm actually curious to see if when they do this repair, we're going to have to find out what the whole story is. Now, the contractor actually found water on the ceiling. He found water on the walls. We had to put all the drywall out of that room. So I'm actually going to ask the condo association to pay for that repair too. But we're going to have to find. I'll let you know what happens because I don't know. It's going to be we're in the middle of it.
My guess is I think you're going to be in good shape.
Yeah, I'm hoping so.
I was 100% covered in my condo situation.
I'm hoping so too. By the way, we got Kevin on the line. Kevin, what's going on, man? Kevin, you there? Oh, I don't know if we still got him. All right, we're gonna. Well, I don't know if he's there. Oh, he hung up on us. That's terrible.
Kevin, what'd you get? Nervous?
Really, man? Come on. We're smart people. We can help you.
Hey, guess what? It's time for the stock option Sultan anyway.
It is. I know, but I was hoping we could get Kevin in real quick. So, the stock option Sultan, you ready?
Stock option Sultan. Stock option Sultan.
Woohoo! I was right about Apple. I was just a little delayed. So Apple, we had a whole conversation at the mastermind meeting a couple of weeks ago, and I said Apple just broke through, and Apple's going to skyrocket, and it's going to continue to skyrocket. Now, here's a little weird thing about how we trade options. We all sold it. We all made our money, and we're done with it unless. So I'd like to see an accidental, really, really bad day and have it drop below 140 before earnings. Earnings is coming up in 3 weeks. On 7/24, earnings is as Apple's earnings, and Apple is going to take off after earnings most likely. But we don't play that way. We don't guess. But most likely, Apple's going to take off after earnings. If we can get it below 138, I'd ride it from 138 to 145 again. So that could be a really great play if you're so inclined. Facebook is another one that we like to play during earnings. The problem is Facebook's at 350, and I'm not comfortable with it at this price. I just don't know what to do with it. I mean, if it goes down to 320 or 330 before earnings, great, but I'm going to let this one go. I don't think I'm going to play Facebook this earnings. I don't think it's for me.
I agree with you. I'm not touching it.
Yeah. I also here's my prediction, by the way. I think that it's going to get hurt after earnings big time. I wouldn't doubt if Facebook goes below 300 after earnings because there's some bad stuff going on with Facebook. The Apple change, when Apple changed their algorithm, where you can now opt out. I'm noticing. First of all, we advertise heavily on Facebook, and we're noticing our advertisings are not very effective anymore. And we tried to hold in there, and we actually got to the point where we actually don't pay as much to Facebook advertising anymore. We moved the money to other places. So I'm thinking we're not the only ones. I've also noticed that advertisements that I'm getting on Facebook are not targeted to me the way they used to be. So I'm going to say the same thing. I got a feeling that there's going to be a bunch of people pulling their money out of Facebook advertising, at least until something changes. And when it does, great. But until then, I actually think Facebook is going to take a major hit. However, that's not really how we play either. We don't guess. We don't play that way. We'll see where it is. I got a couple of good ones for you. AAL. Even at this price, at under 21, it's still an awesome, awesome play. When it went below 20 the other day, I jumped into a bunch of it, and I said, everybody, the call for, I can't remember what it was. I think it was August. I think it was
August 20th.
The August 20th call rate because the right. No, well right. So the earnings date is 7/22. That's right. We went into August 20th. Right, exactly. And it was $1.25. Now I think it's like $1.70 for the $20 strike price, which is an unbelievable play. If you don't know how to trade options, come to Investor Schooling. Let me teach you, and you're going to make this as your first play because it's going to be a beautiful play. This is going to be a no-brainer play. And I would even expect if you hold in there long enough, you double your money. But I don't want to say that because we don't really play that way either. We tend to make 28 to 35% per trade. We don't get greedy, and then when we don't get greedy, we end up making some money. So I'm going to tell you that's a really great play. Also, CCL, another great play under 22. I think I jumped in the other day under 22, but even 24 is okay. It's going to hit 30. It's going to hit 30 soon, probably in the next month or two. It's going to hit 30, and I like it as well. I think that's another great play. You got one you want me to look at, Phil?
No, I'd say I'm playing the ones that you've been recommending, and I'm kind of in that realm right now.
Alibaba is another one. Now, Alibaba is in a downtrend, so you need to play the channel, the down channel for Alibaba, and you will actually do well with it as long as you play the downtrend. Don't expect it. So the last time it hit 210, maybe it hit 220. Don't expect it to hit 220 again. Expect it to hit 215 now. So keep trending down with your play. So at 200, and I bought a bunch at 200 the other day. At 200, it'll trend up to about 215. Get out, and you'll make some money on that. The earnings date coming up on that one is 8/18. So I'd go into September minimum, and that will be a good play for you as well. RCL is another one. We talked about CCL a minute ago. RCL, I was looking for 78. It didn't happen. But anything below 80 would be a play for me. I like it. And those are good plays for me. Anything below 80, I'd go in there. Matter of fact, it looks like it hovers around 80, and then it doesn't really go there, which is why I couldn't get it below 80 the other day. But if it goes below 80, it's an awesome play. Even at this price, it's not a bad play. It's just not great. So if we get it at 80, that would be fantastic. And I'd be all in on that one too. All right, where are we here? We got about. What do we got? We got about 2 minutes left. JNUG. I got to go to JNUG real quick. JNUG is my nemesis. I lost a lot of money on this year on a bad play on that. But it is what it is. And JNUG, right here again, another one below 80 is a play. But it's also in a down channel. I wouldn't ride it anywhere past 85. So I'd like to see, I think I have my alert set for 75 on this. And I'd go from 75 to 85. And I think that's an also great play. All right, we got about a minute and a half. What do you think, Phil?
Well, I wanted to thank our producer, Sean, for helping us out today. If you're interested in becoming a sponsor on this show, email us info@investorschooling.com, info@investorschooling.com. Don't forget to visit investorschooling.com for your free class this Thursday night at 7 p.m. on real estate investing, stock option investing, and just plain making more money, okay? If you believe in yourself, we might invite you to another complimentary class after that. So let's see how it goes. Our address is 108 Corporate Drive, Langhorne, Pennsylvania. We're also taking this broadcast that we do on 1210 WPHT, and we're sending it out to a number of other stations all over the place. New Jersey, Philadelphia, San Francisco, Portland, Oregon, and a hotbed Erie, Pennsylvania.
Ooh, we got a couple of calls from Erie when I asked them for him.
And there's nothing more important than the WWDB station run by the great Sam Spicer at 8:60 a.m. Sam is a legend in the Philadelphia radio business, and nobody's better.
Come on, you still got 6 seconds.
Go ahead, you can finish it off.
Go to investorschooling.com right now. RSVP right now, investorschooling.com. And we are
Out of here.
This program is a paid commercial.
Clear.
Thanks, buddy. We'll talk to you soon.
All right.